Afternoon. Thanks so much for your time. I'd like to start by a subject which you track very closely, and that is consumption. Also, there was very clear mention of improving rural consumption by the RBI governor today in his speech, because it has links to a lot of listed companies in the consumption space, or autos or many other. So I want to understand what are the signs you are reading on the trend of consumption. Is it indeed improving on ground when you talk to companies?
Yeah, so rural consumption has definitely bottomed out and it's inching up gradually. So it's not a very sharp recovery as of now. It's not, but at the same time, it's incrementally getting better. Management commentaries from FMCG sector this quarter, all of them largely agree to this fact that there is slight pickup in rural consumption for sure, and the fact that inflation is coming down should further aid rural consumption recovery and volume recovery in the quarters to come. So I think that's the broad view from most of the managements, and we also concur with that view. In our numbers, we are incrementally building in better volumes and overall top line growth from rural centric businesses going forward.
Okay.
But it's not going to be a very sharp V-shaped recovery. But if we have a good monsoon, and I think the chances of a strong monsoon are probably less. But if we don't have a bad monsoon, at least even if it's normal or slightly below normal, I think we should be fine as far as rural consumption goes in second half of this financial year.
Varun, I was looking at some of the stocks that you prefer, and FMCG index has really broken out. We are seeing ITC, Britannia, all of them getting to all-time highs. How is the valuation metric looking? And on risk reward versus valuations, which are the consumption stocks which stand out in your view?
See, I think over last 2 years, our standout call, and it was a fairly simple call, was ITC in terms of the valuation gap which was there, and we believe that earnings will bounce back. So that stock has done particularly well, and now valuations have reached close to kind of fair value zone in our view. Other stocks, I would not say valuations are absolutely comfortable. They are still slightly elevated, but in the relative context of the market, I would say that FMCG is starting to look a tad better in terms of valuations, because a lot of other pockets, of the market, say I think barring banks and IT, which are reasonably priced, most of the other sectors now are looking slightly, overpriced in terms of valuation. Be it, even the investment side of the of the economy, which we are very bullish on. I think valuations have got a bit stretched out there. If you look at consumption, especially the discretionary stocks, valuations are more stretched out there. So in that context, I think FMCG valuations is not a big risk, but I think given the still slightly elevated level of valuations, your returns may not be very high, but I think the risk reward is looking good, because both margins and volumes will see an uptick over the next 2 to 3 quarters. So at least I think some absolute return could be expected. And the stocks beyond ITC which we like out there are Marico, Godrej Consumer, and Dabur. These are the three names which we like.
Have you also looked at, Varun, some of the other stocks which may be from other sectors, but actually they derive a lot of their overall revenues from tier 2, tier 3 / bordering rural, and are a consumption play? Say Hero MotoCorp, for example. It's a completely rural consumption play. Tractor companies. Some of the microfinance guys, they are also tier 2, tier 3 / rural plays, but actually from financials. Do you have kind of positive thoughts on these kind of names as well?
Yeah, it's very stock specific, so I would not paint all of them with the same brush. But we do cover some of most of these names. So microfinance, we are clearly seeing green shoots out there in terms of both growth and as well as the credit problems which were there. So we are positive on that space. We have we like Bandhan Bank, we like Credit Grameen. So we cover quite a few names out there. Autos again should benefit. We cover most of the auto names. Hero, we were positive, but we have just downgraded that stock to reduce now, given our view that 100cc motorcycle as a segment is going to structurally keep losing share to other segments, and Hero Moto is very strong in 100cc, but not so strong in others. So we were positive till now, but we have just recently downgraded Hero Moto. Some of the NBFCs like M&M Financial, we are positive on. Chola Mandalam Finance, we are positive on. So I think overall NBFCs and microfinance can be looked at because they are fairly strong. They are quite integrated with rural and how tier 2, tier 3 economy does. So these are some of our topics to play that rural recovery.
You must have worked the numbers so far for broader markets as well for the benchmarks. What kind of valuations are we trading at right now? After these numbers, have you cut them for, say, full year 24 and even 25 for that matter? Sensex, Nifty, whichever you track, or even one broader market index?
Yeah, so there are two of them. One is our coverage universe, which is around 220, 230 stocks, which we track very, very closely. We look at what is moving the earnings up or down. Out there for, basis FY23, Q4, largely FY24 and 25 at an aggregate level remain unchanged. There is a 0.4, 0.5% kind of a cut, but which is a very, fairly small number. But within that, if you see, there was a lot of divergence. So BFSI obviously did the heavy lifting on the positive side. On the negative side, it was largely led by oil and gas, which we believe in FY24 should do better. FY23 there were large cuts in oil and gas, especially oil side, and in the other big drag was the IT sector. Now FY24, overall earning growth we expect it to be better than FY23 for our coverage universe. Even if I X out oil and gas, which should see a big bump up, we are somewhere in mid-teens. Largely again led by banks, which will again show 20% kind of a growth even in FY24 on a already elevated base. I think qualitatively this quarter was better than previous quarter because in this quarter almost 60 to 61% of our coverage universe delivered earnings beat. This number was hovering around 40, close to 40% in the last 2 or 3 quarters. So in terms of breadth of market, this was definitely a positive quarter, and we believe this trend will get even stronger in the subsequent quarters because with inflation falling and interest rates, taking a pause, the small and mid caps tend to do much better, which were under pressure from our earnings perspective in last 12 months. So we expect, this broad-based sort of earning growth to pick up. Maybe at a Nifty level, earning growth will be a tad lower because some of the sectors heavyweight like oil and say metals and all will not grow very strongly even in FY24. But the broader market should see better earning growth in FY24 for sure.
One last word. Has it, the right time to buy into IT has come? Do you think so? We are pricing in a recession in US where the client spend will shrink, or it's yet to be priced in and then only worth looking?
No, we believe it's largely done. So we were significantly underweight in our model portfolio a year back. We have progressively cut our underweight through the year and now very close to neutral zone. We more than I think now the price correction, we are just waiting for another 1 or 2 quarters to go by to get slightly better visibility on how deep is the US recession. But in our base case, we believe I think stock prices are now fairly reflecting the the underlying macro situation in the developed world, and therefore from here on the chances of downgrades look fairly limited to us. So I think one should start looking at this sector more closely and look for investment ideas from a 12 to 18 month point of view. We do have quite a few of the names in our model portfolio, but we are still not overweight the sector. We were significantly underweight, but now have cut the underweight.
Right. All right, Varun, thank you so much for your time. Always great chatting with you on a host of spaces. That was Varun Lohchab of HDFC Sec. Time for a short